Good day and welcome back to this channel. Today we'll be having a weekly review of USD CAD. Let's see the possible things we should be expecting come next week. And as usual, we're going to start our analysis from the monthly time frame. Let's say the 3 months time frame. It's always good you start from the higher time frame to have a clearer picture of what you should be looking at. This is the 4 hour time frame. So we could just check on the 3 months time frame to have a clearer picture of what we should be expecting. On the 3 months time frame, we could clearly see that there are some imbalances here. We have this imbalance. This was a bullish imbalance that the market was supposed to go continue bullish from. As you can see, this bearish candle closed below it, thereby forming a new bearish imbalance that the market would not likely go down from. Outside that, there is a key level here that the market is reacting from as well. So we have like three confluences. They're very strong confluences. This is a 3 months time frame. We have this resistance level. We have this fair value gap. We have another fair value gap here. So this is the price balancing here, and we have a resistance level as well. So with this, and this, we're having a strong confluence that the market is going to be reacting from these levels. It's going to be going down from this level. At least we're going to have some reactions from this level towards this low. So for that reason, I could just mark. Let's have let's just shade that area out. So we have price balancing around this area. Plus we have a key level here. Plus we have one key level here. Everything coinciding with one another. So this is strong confluence that the market is going to react from there. And of course, as you can see, the previous 3 months candle, you can see the nice rejection from that area. Tell you that this area is very strong. So the market likely is going to push down from here. So initially we had a rejection from this area. Still on this time frame, we have a rejection from this area, as you can see. Before that rejection happened, you can see the rejection swept this previous candle, this previous bullish candle high, tap into the key level, and then created another fresh key level. Created another fresh key level. Let me remove this one from there and put it at this fresh key level. So we have this fresh key level here that the market created. Now this bullish move we are seeing was just coming to target this key level that this sweep, this bearish sweep caused. Finally, we've got into that level. So there's high chances that this market is going to reject from that level and start pushing down. So with that being said, though we are seeing bullish movement here, we should be expecting a bearish move right from this area. Again, if you look at this, considering just this structure we have here, this was a higher high, a higher low, and we created a higher high. We've created a higher low now, but we'll not be able to create a new higher high. So for that reason, it means that these lows, this low possibly they are going to be weak low for the market to come back to sweep them, tap into. There are some key levels here the market possibly will tap into. But we're not going to just have a kind of a longer, a wide view of whatever that is going to happen. We'll just take it one step at a time. So for now, we are seeing that the market has rejected from this price balance range coinciding with this resistance here. So we know definitely the market is rejecting from here and we are going lower. Plus, we've seen that this market, this bullish move we are seeing now, actually came to tap into this resistance, this newly formed resistance here. So from here, we'll be having a rejection to continue bearish. Plus, we have this massive bearish candle showing that the bears are still very much in the market. So everything is indicating that we are going lower. So if at all, we should be able to get at least to this low first. And also there's a key level here. So this low could be acting as liquidity to this level around this place here. But before we get to this low, definitely we should get to this present 3-hour candle low. So we could just mark all those areas out. And after a reversal, we should be expecting the market to get to those levels. So we have this level that will be acting as liquidity. We have this key level here as well. So you're just going to leave it in this way. Now going to the 1 month time frame. Of course, you're going to notice that we have a change in state of delivery. So we have bearish, bullish, and finally we've broken below this last support. This was the support that was supposed to take the markets higher, assuming we are going higher. But now we've broken below this support. Let me expand so you can see that. We've broken below the support. So that's to tell you that the bears are very much available in the markets. Again, this bullish move you're seeing now was that bullish move from the 3 months time frame. And I told you that the reason for this move was to go and tap into that resistance that was created by that sweep. This was a sweep from the 3 months time frame. You can see. So this was the price balance range for that same 3 months time frame. So this one is showing us that the market is still very much bearish. So this move you're seeing now is just to go and tap into this level. From here, we're going to have a rejection and start trading downward. So from here, we can see, let's check our left hand side to see some other levels we have around. So as you can see, this level already had acted as resistance before. So we have the resistance here, we have resistance here, and also it has acted as support before as well. So we have resistance, resistance, acted as support here, acted as resistance here again, acted as resistance here again. So this level is a very strong level that we should be expecting price to go lower from. So it's a very strong level. We should be expecting price to react from and start selling. Remember, this is just the Monday time frame. Let me remove this. Now we have a change state of delivery, like I said. We're supposed to go bullish, but we have a change state of delivery now, telling us that we're very much bearish. Going to the weekly time frame, as you can see from the weekly time frame, before this market broke towards this low, we have the higher high, a higher, okay, the lower high, the lower low. Now we've gotten a lower high again, so we should be expecting a lower low from here. Outside that, we have something like this. I just want people to understand. Look at this market before it dropped to this level. Pick that stuff. before I drop to this level, we have this reaction here that push the market down. So when we go to this level again, you can see the market reacted from this last supply level, but feed, and decided to push higher, as you can see. So assuming we were supposed to continue higher, then here would have been a very nice demand zone for the market to buy and keep going higher. But as you can see, here feed, you see the market closed below this low, showing you now that the bearish, the bears are very much available in the market. So that is why this demand zone feed. So now as it stands, we have something. Sorry. Now as it stands, we have something like this. This was the reaction. So we're supposed to have this reacting to give us a new high, but now the market broke below. So we've had a change of character here. So we're just going to pull back to this level, then continue selling. At least to target any of these lows here, any of these sign here. So this is just going to be our analysis, weekly analysis. So from this level, we'll be having a reaction to take the market lower. So this low is going to be a weak low for the market to sweep, tap into this level and go lower. For now, we'll just work with this level from this high here to this low. That's what we're working with now. Remember, we are still in the weekly time frame. So we're looking for how to take a sell around this area, targeting these lows. We're going to take this low. Remember, this low was the 3 months time frame liquidity. So this area here. So first of all, we're going to target this low. Now, how do we go low? How do we go lower from here? You find out that you can see a nice fair value gap. This is a key level the market is reacting from. And if you go to your left, if you push the market to your left-hand side, you see that this level, of course, like I marked in the monthly time frame, you can see it has been a very nice level the market has been reacting from since. We have 1, 2, again 3. Here acted as resistance, resistance, resistance. Okay, acted as support here, acted as support here as well. So of course, there's high chances it's going to act as resistance again to push the market backward, downward, I mean to say. That being said, we have this fair value gap here. So we should be expecting the market to go lower from there. So going to the daily time frame, as you can see again, let me read. As you can see again, this is a nice area. Here acted as resistance, here acted as support. So coming here again is going to act as resistance to push this market downward. So everything is just indicating that the market is going bearish. This market is going bearish. So we're just going to stick with the direction. Simply what happened here was, after this nice bullish, you can see for a very long time now, since what was this? 28th of December 2025, the market has been buying. It bought till on the 9th of this month, January 2026. And you see, we have in the short candle there, we have a strong bearish candle that actually faked out traders. Remember, this move here has not actually touched this level. So this is like a fake out. Then the market had to push up again. You can see another fake out again we have here. So we have this fake out first of all. Then the market became bullish. Again, the market tapped into, right? I think it created the fair value gap. Let's see if it tapped into the fair value gap. No, it didn't even tap into the fair value gap. So it created the bearish fair value gap that we're supposed to go lower from. Then we have this decision again. This is like a fake out again for a lot of traders again will continue selling, thinking that the the sell pressure has set in already, but not knowing that we are yet to touch this key level. So finally, on the 15th, we moved very close, but still did not touch before on the 16th, which was on Friday, actually touched the level. So now touching this level has confirmed that, okay, this is a strong level. So any reaction from here in a smaller time frame, we should know we are going bearish already. And this bearish move is going to be a very nice bearish move because all through from here to this level, it has been bullish, bullish, bullish. So we're not going to face any kind of obstruction other than here. Maybe when the market gets to this level, we might have some obstruction here, right? Yeah, we might have some obstruction here. But in a nutshell, we're going to have a very nice move coming down to this level because it was easy for the market to get to this level. So coming down is going to be easy as well. And again, following that, we are bearish. That being said, now we're going to the daily, the 4-hour time frame to see how we're going to take our trade, where we should be expecting our trade from. Now, from the 4-hour time frame, as you can see, we've had this rejection from this level. See, this move, this last before the last 4-hour candle, actually swept these equal highs. You can see how many highs are there. We have one, this first high, this, and this. So this just happened to sweep all the highs and tap into this key level. So with this, now we now have that, okay, whatever happened here, we should be looking for a change of character around this area to keep selling the market. Let's look at the first target we can get from the daily. Okay. So the first target we can get from the daily could just be this daily low or Friday low. Target of Friday low. Target of Friday low. Target this other low before we start going down. This has done the sweeping of all this buy side liquidity. So we should be targeting the sell side liquidity. So the closest sell side liquidity is this one before we target all these ones here and start going downward. So because all here, they're all liquidity. So we should be targeting all this liquidity. All these are all liquidities. So we're going to target all of them. So from this level, we'll be looking at how to get our trade. Let's just use the chart to see where we can get our trade from. Going to the 1-hour time frame. Going to the 1-hour time frame. As you can see, we already have a sweep. Let's see the weekly time frame. I want to show you something there. From the weekly time frame, you can see that this last week that just finished actually just swept the week before this last week. So that is just a nice sweep showing you that the market is getting set to sell. Now going back to the 1-hour time frame, we have this bearish candle sweeping the bullish candle high, as you can see. Let me expand it. You can see the sweep, thereby creating a key level here. A key level created here. Resistance key level was created there. And you can see that this candle here has already tapped into it. So where is the closest key level we have? It's going to be this one. So we have this OC level here, as the closest key level to sell from if the market pulls back to this level. So once the market pulls back to this level, we're going to take in our sell. We pull back to this level, we'll take our sell. Then once this low is broken, of course, we know we are already selling. Targeting this low first.